What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on BABA stock.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on a price chart and how we caught this movement to the downside from this top to this bottom that brought us about 27% of potential profit, or depending on your position, probably it saved you about 27% of your capital. Then I will continue with the fundamental news and I will show you the latest news directly related to BABA. And at the end of this video, I will share my thoughts and my technical analysis, and I will show you what should we expect next. So let's start with the price chart. I made my previous video right here at this point, and I've told you that we had quite harsh movement to the downside from this swing high, and I've told you that from this point we have to have a retracement, and we have it. And my main assumption was that we should see some kind of zigzag, the shape of zigzag in this movement to the downside, and this means from the golden pocket range, from the range of about 97.77 all the way up to $100, we might see this next leg to the upside, and then we have to land lower at this range of support. But instead of this, we landed much earlier and we hit exactly the same spot that I marked previously. But why we haven't this movement to the upside? Let me show you in details. So when I make a video, I do not dive deeper into the entire structure, but let me show you this. We all know that the ABC correction might have a shape of 3-3-5 structure or 5-3-5 structure. And from this top, probably we might have this as our first wave, second, third, fourth, and fifth. And another leg might be to the downside from this top, 1, 2, 3, 4, and 5. And we have two structures of 5 waves, and we have this simple zigzag, and this means our ABC correction is nothing else but this movement. This is our A wave, B, and C. And if it is the correct breakdown, definitely we might have a bounce from this range of support that I covered in my previous video. And I will show you what should we do in details in just several minutes. And for now, let's continue with the fundamental news. So, what was the reason of its recent price action? And let me show you that they published earnings report on February 23rd, and they beat expectations in earnings and revenue, and they have basically very strong earnings report. Let me show you right here that Alibaba non-GAAP earnings per share of $2.79 beats by 39 cents. Revenue of $35.92 billion beats by $40 million. And let me go to this. We delivered a solid quarter despite softer demand, supply chain and logistics disruptions due to impact of changes in COVID-19 measures, said Daniel Zhang, Chairman and Chief Executive Officer of Alibaba Group. Looking ahead, we expect continued recovery in consumer sentiment and economic activity. We are focused on driving growth for our customers amid the competitive landscape and creating sustainable long-term value for our shareholders. So, definitely, the CEO of this company is very bullish on Alibaba, and it is quite obvious. And we have to realize that right now Alibaba is still undervalued company because it had a quite harsh movement to the downside from the November of 2020, if I remember it correct. Let me show you right here. From this top, from October 2020 till present day, it is still in downtrend and it doesn't break previous swing highs in order to establish higher highs on a slightly bigger scale. And we are about to see it. I have to say that we are about to see it, and I will show you this in just several minutes. So let's continue with another article. Alibaba sinks 6% despite strong Q4. Baird expects continued benefits in cloud. So, and let me quote you further. Alibaba shares sank nearly 6% on Friday, one day after reporting strong fourth quarter results, with investment firm Baird saying it expects continued benefits from the post-COVID Chinese recovery, especially in the cloud. And I've told you multiple times that their cloud service might be the next major catalyst for the entire company, because they are acquiring more and more new customers, and their cloud service is a direct rival of Microsoft Cloud and Amazon Cloud Services. And let me quote you further. Analyst Colin Sebastian noted that it's still very early in the recovery, but improvements in e-commerce and retail segment volumes, along with growth in the cloud, should help the Chinese tech giant. We expect Alibaba to continue benefiting from improvements in demand and supply chain, and we remain constructive on the stock as China recovery play. Sebastian, who has an outperform rating on Alibaba, wrote. Alibaba's cloud revenues rose 3% year-over-year, seen as fairly stable compared to fiscal second quarter, despite the macro headwinds facing the global economy. However, the company's management said it expects strong demand for its cloud services, which Sebastian said should come from growth in the public cloud and technologies including artificial intelligence and virtual reality. So, in general, this news is quite positive because a lot of people and Colin Sebastian also said that their cloud service is very promising division, and we have to be prepared that when Alibaba will go higher, it will have multiple sources of this movement, multiple drivers of this movement, and we have to know which of them will be the main ones. So, and let me show you another article on Barron's, and it was published on March the 1st, and it says, Alibaba and China stocks are rallying. Chinese growth means lockdown pain is in the past. And let me quote you further. Alibaba and other Chinese stocks were rallying on Wednesday after data showed that China is quickly leaving behind the lingering impacts of COVID-19 lockdowns, which spurred a slowdown in the world's second largest economy last year. A key measure of Chinese growth marked its fastest expansion in more than a decade in February, which the official Manufacturing Purchasing Managers Index (PMI) rising to 52.6 last month from 50.1 in January. The February PMI came ahead of expectations and also marked the highest level since April 2021. And definitely this was the reason of its latest movement to the upside. Let's switch again to hourly time frame and let me show you this movement during the last session, basically an after hours session. It went higher for 5.73%, but from its lowest point it gained 2.48%. Definitely very good movement, and with the assumption that we completed the entire retracement, probably it is the beginning of new uptrend. And let me show you that a lot of analysts are still very bullish on Alibaba. The consensus analyst price target is $148.13, and the latest filings that were made on February 24th and 28th, as you can see, one of them, KGI Securities, upgraded their forecast, but they doesn't set the precise price target. And Trist Financial boosted price target, set the buy rating, and set the price target at $130. But Susquehanna lowered its price target with the positive rating, and they set it at the level of $175. So still very high upside potential, and this means we can cautiously rely on this forecast. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, let's switch to 4 hours time frame and let me show you indicators. Right here we have higher lows on our side with the lower lows on the price action. And this means this is the bullish divergence, and this divergence means that we might have a trend reversal to the upside. And we have this first spike in its price, and we are not far from its lowest, its swing low at about 3.72%. This means if you want to enter your long position right here, you can accumulate it at the current range with the stop loss at slightly below this previous bottom at around $86.89. And the upside potential for this movement, in the most conservative manner, we might measure this movement like this. We can pull the Fibonacci retracement tool from its swing high to swing low, and we have two price targets at $95.09 and $100. This means from our current range we might have up to 5.72% to the first price target and about 11.44% to the second target. And it implies more than 4 to 1 risk to reward ratio to the second target with our stop loss order. And this is quite lucrative setup, but we still have a possibility to hit lower targets, and that's why don't forget to put your stop loss slightly below this bottom. So, I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up on the